There's a lot of talk about student loans right now, and if you caught my last video, you'll see kind of an example of what a lot on the right and conservative leaning libertarian type spaces, how they've reacted. Uh, it's some of them, not all of them, but it's not been the best. They've been very giddy and very happy about it. And while I understand getting a political victory is a good thing, it's more of mocking the people who were hoping for the student loan forgiveness. That's probably not the best idea. Celebrating a political victory and not wasting, you know, billions of taxpayer dollars on something they consider frivolous or undeserving, or having, basically people who didn't go to college pay for those who did. Those are all fine points, and it's worth celebrating to an extent, but maybe don't mock those that were counting on it. That said, where do we go from here? So, student loan forgiveness is, for the most part, shut down. The Biden administration is trying some things. They're doing a little bit of restructuring right now on how bankruptcy is considered, how writing off the debt is considered, which is a good thing. It's a step in the right direction. Because what some people don't really consider, and this is what I see a lot with the right-leaning types, the conservatives, libertarians, is that the student loan debt is not considered normal debt. So let's take the biggest, debt guru right now, my bad, right now, Dave Ramsey. His start was in real estate, and he's very open about it. And he started by getting these short-term construction or investment loans. They kind of roll over every month or every 3 months. And he was doing it to basically revamp houses and flip them. Well, he did it for a while, and then several millions of dollars worth of real estate, and the market fell out, and he couldn't unload it. He couldn't pay back his debts, and so he had to declare bankruptcy. And that's fine. People do it all the time, and it's a big headache, and it's a lot of stress for the family, a lot of stress for the individual. His book talks about it some. He talks about it. It's not a fun thing to go through. I don't wish that on people. Obviously, I don't want that for people. But the difference is, in this instance, he had millions of dollars in debt taken out on a bad business decision, and he was able to get rid of it. He just got rid of it through bankruptcy. Now, it did follow him. Now, that's when you do bankruptcy, normally it follows you from, I think, 7 years. I think it's kind of the timeline. It might be longer, it might be shorter, but 7 years is usually how long it takes for that to roll off your credit report before any bank really will touch you ever again for something. You can find some who do manual underwriting, and they can kind of take into consideration some different aspects. Those are usually credit unions. Smaller lenders will do that, but the bigger, more corporate banks who do kind of an automated just look, you're done. Like, you cannot get a loan from them for anything. So it does follow you, but it's gone. Like, 10 years later, if you're 21, 25, whatever, and you make a bad business decision and you declare bankruptcy, when you're in your mid to late 30s, it's all done. You'll basically be able to do whatever you want to then, like you had a fresh credit history, or even a good credit history if you've been able to build up some credit in the meantime using different avenues. So that is an option for businesses, and you see this in larger businesses as well, not just individuals. They'll make bad decisions and they'll declare bankruptcy, reformulate things, restructure, or just sell off the assets and move forward. That's something available to the public in general when you make bad business decisions or just bad personal decisions. You can rack up $20,000, $30,000, $40,000 in credit card debt and do the same thing. Take a personal loan out for $100,000 if they will give that to you and declare bankruptcy. Same thing happens. You'll have to probably sell off assets that you can, make restitution payments for a certain amount of time, but in, let's say a decade later, you're all back to where you were. It's done. The difference being is that if you declare bankruptcy and you have student loan debt, that does not go away. You can declare bankruptcy and get everything else taken away, and that student loan debt will still be with you. This is the component of student loan debt that you never really hear those on the right address. Some do if they're being honest, but most of them don't. Their argument usually is, if you took out the loan If you took the money, you pay it back. And that I would agree with in principle, but the fact that they are going to, because the federal government guarantees those loans, they will either garnish wages, they will force it, through garnishment. Heck, they might even lock you up. I don't know. But they will get that money and it is guaranteed. Or the Department of Education, like if you die, will just pay it off. Like that. That's also part of it too. Like it's a guarantee. The banks don't have a risk of losing that money because the federal government guarantees it. And they're also collecting interest on it. So there's zero risk for the banks because the federal government guarantees it. And there's no risk of default because the federal government guarantees it. And they're being paid by the federal government to service these loans. So they're getting interest as well as basically the contracts to manage the money. It's a good business to be in, especially under normal circumstances. Now, the past couple of years, that's changed some because of the pandemic. So obviously, student loan payments stopped. Those interest payments didn't. I think the federal government still covered the interest payments. I don't think they covered the principal. Obviously, that's still on you, but the interest, because they set zero, they covered it during that time frame, and so they were still getting their money, I guess. There was a lot of shuffling around with different servicers and how they did stuff. Move loans somewhere else. There's a lot of stuff going on in the background, but they still got their money, well, the interest at least, and they still got paid for servicing the loans. Now, there were lawsuits around some smaller institutions that I think we're getting kind of the short end of the draw there. But the federal government, there was several news articles that covered it too, about the federal government paying the interest rates. Here's the thing about that as well, is that the interest is set by Congress. Congress decides those interest rates. It's not like the Fed or a bank where it's kind of based off of the Fed rate. So let's take Robinhood, for example. It's a stock trading app. Their margin accounts, usually it's like 2.25% above the federal rate. So federal rate is 5%. You're going to be paying 7.25%, because they pay 5% on the money that they use to give you. So they're making 2.5%, something like that, which is fine. That's how a lot of banks work. They kind of skim off the top there. They got to pay money to borrow the money, and then you pay money to borrow the money on top of that. So that's just how interest works for a lot of banks. Can't really get around it. But in this instance, the rates are set by Congress. If they want to, they could say, okay, it's 0%. We guarantee it. It's 0% interest. We're still paying the servicers to manage it. That's fine. The point I'm trying to make here is that given the fact that the loans themselves are guaranteed by the federal government, you will be paying those loans back. You cannot bankrupt them. You cannot discharge them. You will be paying them back. The federal government will force you to do it. At point of weapon, point of gun, they will force you to do it. That's, a bit of a exaggerated scenario, but they will definitely do it. Wage garnishments are a thing, and it happens all the time, and they will utilize it to collect that money from you if you don't pay. A lot of people right now who are coming up on the repayment starting in October, I think, or is it September? I think it's September 1st. They're going to learn about wage garnishments. I feel bad for them. They're going to learn about it. They think, oh, well, I don't have the money. You do have the money. You do. Unfortunately, you do have the money, and they're going to get it from you because you have the full force of the federal government to do it. You can't default it. You can't get rid of it. They'll do it. So here comes kind of the middle ground that some people discuss. So you have those on the left want free college, or they want all the student loans forgiven, or both. That's probably not the best idea considering our population is so huge and so diverse. You can't really implement something like that effectively and efficiently. You just can't. It's just not going to work. But what can work is keeping the current system and setting the interest rate to zero. Now, this will also require the way bankruptcy works. If you allow that to be discharged in bankruptcy, that will also affect college prices. So you have lenders who come in and they give money out like it's candy, or it's like it's nothing, because they know the federal government will back it. Now, if you, I guess, remove that protection, you will have lenders more hesitant to lend money. Or conversely, set the rate to zero because they have no risk of, of bankruptcy, and you will allow students who graduate make payments on their loans actually pay down the loans. Because right now, doing normal income driven repayments, a lot of times the minimum payment does not cover the interest. It doesn't even hit the principal. So that's why you have people who pay on it for 10 years and end up owing more because the interest compounds because they never touch the principal. All you got to do is remove that interest, and it will fix the problem. Another thing I've seen somebody mention in Australia is a option to basically you have a fixed rate, or you fixed basically simple interest. So it's like you borrow at 5%, you're paying 5% of that money. You borrow $100, you're paying $105, and then your payments are split up amongst that. Like you don't have compound interest, it's just simple interest, and that adjusts with inflation, which is probably a even more middle ground. So you're still paying interest, the bank still can make some money, and they still get paid for servicing it, and you can still guarantee it by the federal government. But you don't have people who are just going to be stuck in debt because they never touch the principal. That's probably a even more middle ground, I think, than going full blow into 0% interest. The issue, though, with these ideas is we're so divided right now between the left and the right. The left wants it all paid for, wants it forgiven, without really addressing the underlying issue of what's caused it. The right doesn't seem to want to address the fact that the way student loans are treated is not like a business debt or a personal debt. It's different. And so trying to think of it in those terms doesn't work for the conversation. They aren't arguing or considering it from reality. And those two sides just can't seem to come together because they both want different things. I don't know how you can address the issue with it so divided, especially if there's a middle ground to be had with a couple of the options that I pointed out. If you were to bring those up, one side or the other is going to want to pull it back the other direction, despite it not helping anyone at that point. Anyway, these are just some thoughts about the student loan crisis. For those of you who are going to have your loans start back up here in the next couple months, start planning ahead for it. I don't envy you. I feel bad. Some of you have gotten used to it. Your standard of living has changed, has gone up because you've had more money. You're going to have to adjust. Some of you are in worse off situations thanks to the economy, and that's the people who are really going to be hurting from this. And I feel bad. Look at all avenues right now. I can tell you firsthand, the Public Service Loan Forgiveness Program, Biden, for all his faults, his waivers, his changes he's made with that, kind of loosening it up a little bit because of COVID, has really helped a lot of people. It helped me personally. So if you work in public service, and that's local government, federal government, work for nonprofits, if you've been there for 10 years, look into it because you may be able to qualify, and it's definitely an option. There are a couple other options right now. He's releasing a plan to allow certain, essentially it's similar to bankruptcy. It's kind of means driven. So if if you having a hard time and you're flat broke, you might qualify for it then. That's still in the process of being worked out. So there's options for you there, possibly. Um, I just really hope that the people who are making the laws can get their head out of their asses and try and figure something out, because right now the system is set up to funnel children. These are children. A lot of them are 17 who are deciding these things. They're 17. Their parents might sign it. They're told from a very young age to go to college, do whatever you can to go to college. And they're signing these loans when they're children. Some of them are just like, they could be a day or 18. They'll need their parents more. They can just go get the loan. 18 years old, barely a legal adult, and they're signing these out. Can't buy a handgun, but they can do this. You also can't get a business loan. $50,000 for a business loan won't happen, but $50,000 for a student loan, they'll do it. Why is that? Because the federal government guarantees that money. I'll leave it there. Be sure to like and subscribe. Comment below with your thoughts about what is a path forward, what is a middle ground. I know there's a lot of ideas that people have, but realistically, what could actually happen? Leave those below, and I'll see you next time.